The economy is doing great. GDP is up and markets are near all-time highs. So why do you still feel behind? Not the can't pay rent behind, more like I make good money, but I'm not getting ahead. And that gap isn't in your head. You're just not in the part of the economy that's being measured. So there are two kinds of people in every economy. People who already own the assets that are being priced and people who are still trying to buy them. Which side you're on changes what every headline means. And most financial media is written for the first group. Look at the last few years. Markets surged, home prices jumped. If you owned, your net worth grew. But if you're still buying, everything just got more expensive. Same economy, opposite experience. And once you understand that gap, a bad economy may actually be one of the better times to build wealth. So here's what those headlines don't show you. When they say the economy is growing, they mean total output is up. That tells you nothing about how it's distributed. One person getting much richer grows the economy even if everyone else stands still. Same economy, different reality depending on where you sit. So why does this gap keep getting wider and not just stay the same? Because asset prices and wages don't move together. When markets are good, capital flows into markets and real estate immediately. But wages respond slowly, if at all. For example, here's the data. From 2021 to 2023, there are 25 consecutive months where inflation outpaced wage growth. So shrinking purchasing power every single month. GDP looked healthy the whole time. So the economy growing faster often means the entry price moving further away for you specifically, which leads to something counterintuitive. When prices go up, that's good for people who already own. If you're still building, it just raises the price of what you're trying to buy. That's not just mindset, that's math. Here's the number that ties this together. The top 10% own 87% of the stock market, according to the federal data. So when markets hit new highs and the economists saying consumer confidence is strong, that confidence is concentrated. The people driving the economy is fine reading are the people who already own the assets. You can see it in real-time survey data. People with large stock holdings report feeling fine. People with small or no holdings don't. And the economists actually have a name for this. They call it a K-shaped economy. One line going up, the other going down. Same economy, two completely different trajectories, depending entirely on which side of the asset line you're on. And the instinct most people have at this point is, okay, I just need to earn more. That'll fix it. But there's one Fed data set that looks inside actual households, not macro headlines, the survey of consumer finances, and it tells a different story. I went through it in the previous video and found something very interesting. When income doubles, net worth doesn't double. It triples. And the difference isn't the house or the retirement account. Those scale with income. It's the brokerage account that's 6 to 10 times larger on double the income. So the gap isn't a savings problem. It's structural on where your money went. Which means the question now isn't just how much you're earning. It's where you actually sit in relation to your assets right now. Now, you might be thinking, okay, but I own some stocks, maybe a house. I'm not purely on one side. That's fair. But here's how I think about where you stand. You are a buyer until you're living off your assets. Until you're withdrawing more than you're putting in. You're still on the buying side. And if you're still on the buying side, reframe every headline from that position. Here's another thing. Volatility and uncertainty compress asset prices. High earners are in their peak accumulation years. Those two things happening at the same time, that's not a crisis. That's actually one of the best structural setups a buyer can be in. The people who built serious wealth didn't do it in calm markets. They did it by staying in when everyone else was deciding whether to. So the question isn't whether the economy is good or bad. It's understanding where you stand and whether you're still deploying or whether you stopped. Most people stop. That's the actual edge. The economy headline isn't lying to you. It's just describing a different group of people. At the start, I asked why you still feel behind despite doing well. Now you know. You're not behind, you're just early and playing a longer game than the headlines are written for.